Nathan from Queens, Ultimate Traders on Reddit, April 8th, 2023. So I actually haven't done any videos in about 5 or 6 weeks. I've been a little bit busy with Connecticut, but it's not just that. I mean, in 2023 so far, I haven't been doing too much trading. I actually did more trading in 2019 because the last few months I've been kind of on the sidelines because I'm expecting a lot worse, and the market keeps going up. So I'm just okay waiting because sometimes you do this over a long period of time. It's better to be on the sidelines, than be involved in every single trade. I'm going to go over that in video 2 and video 3. This first video 1 is the fair value of a stock or index, and which is why I'm on the sidelines, because before I got back into options in October of 2021, I didn't buy things to short. I didn't bet against stocks, bet against the market for years. I stopped shorting in 2014. I stopped doing options in 2017, got back into options in 2021. So I would basically buy things that I felt were more affordable below fair value. So first things first, I've been doing this since I turned 14 in the year 1994. 1994. So I've been trading almost 30 years now. So I'm in my early 40s, unfortunately. So not that I look very young, but I look very young for someone that's been trading 30 years. It's almost been 30 years. And once you've been trading 30 years, it's like a pizza guy or a chef that's been cooking and making the dishes for 30 so years. So once you've seen this so long, and once you've seen almost everything, it amuses you when someone goes in, they just started trading, and they're like, oh, this time is different. This time is different are like 4 of the worst words in market history. This time is different. Those are the 4 worst words ever. Because remember, the stock market, it's like speculation. It is speculation. Is perception of what people view each day. It's what they think that a company has value of what future cash flow generation they're going to have. And if interest rates rise, that means the cash flow that they're going to get coming in is going to be lower and lower. So obviously it's going to drop stocks and stuff like that. So going over this so many years, we're all, not just me, anyone that trades over a long period of time is going to go have a plan. And what I developed is a plan that's worked for me all these years. Ever since the year 2000, I've came up with a lot of plans when the market crashed, because I wasn't going to let that happen to me. Actually a couple of days ago, someone asked me, how much I'm up since day one, since I started trading. And I actually thought I was up way more than what I'm actually up. Now, it's very hard for me to determine exactly how much I'm up, because I started with $2,000 at the age of 14. I got that from tutoring people in algebra for about $10 an hour, and I came up with about 2,000. And over time, by 1997, I put it about 20,000. But all I've done over the years is take money out. So I literally, not talking about retirement funds because I have IRA and 401k, but in my long-term trading account, my day trading account, I only started with $2,000. I ended up putting about $20,000, and I haven't put a dime into it. All I've done is take money out of it. So it's very hard for me to determine how much I'm up. But I was online just the other day, and I was using a compound interest calculator. So I'm actually up about 25%, 26% since 1994. But if you look back to an April video, April 11th of 2021, which is about 2 years ago, to this day, almost 2 years ago, I told people that didn't even want to hear because the market was on fire that you can expect to make 25 to 50% a year. But it's very important because if you could do it over 10 years, you are amazing. A very good trader makes 10%. An excellent, the best traders can make 50%, but somewhere between 25 and 50% after 3 to 5 years of experience. But let's go back into this. I digress. I don't want to make videos that are too long. People are like, oh, Nathan, why was that video so long? So fair value, I've done this over a long period of time. When I say NVIDIA has fair value of $75, it doesn't mean that NVIDIA is going to 75. Tesla fair value is 100. It doesn't mean that Tesla is going to 100. It means that's using my formula, the value that I place on the company. So if NVIDIA drops below 75, let's say it drops to 65, at the current future forecast of the company right now is saying the company is worth about 75. So it doesn't mean that the stock is going to fall to 75. It means that based on what the company is doing, it is worth $75 a share. And the easiest way to look at that is earnings per share. Right now, the way it's going, NVIDIA is making roughly about $3 per share. They're making roughly about $3 per share. And the way that I use valuation, the best way to use it is S&P 500. Because S&P 500, the way that we know it, they've been out to 1957. Says 1957, and the S&P 500, if you didn't buy any stocks but you invest passively by buying the index, is up about 8% from 1957 up to now. By the way, I'm up about 25, but let's go back into S&P 500. So if the S&P 500 is up about 8% per year since 1957, S&P 500 is garnered by everyone as the market. The S&P 500 trades at 18 times earnings. It grows a stock on the S&P 500. The average in an average year, when it's doing 8%, is growing sales between 10 and 20%, and earnings, bottom line, between 5 and 10%. So that's where you get 18 times. So even if I give NVIDIA 25 times earnings, and they're expected to make about $3 per share. So even if I give it 25x multiple, it's higher than S&P 500. And remember, just like I said, the S&P 500 grows sales at 10 to 20, earnings at 5 to 10. Right now, NVIDIA had a decrease in sales 30%, and an earnings decreased by 50%. So believe it or not, if you follow that logic, NVIDIA should have a P ratio of 10, 12, something like that. And if you gave $3, and let's say you gave it 12 times 3 is 36. NVIDIA is like 280, 290. But I'm going to give NVIDIA a premium because people want it. When people want it, you give it a premium. So let's go over to Tesla. Tesla is going to make roughly about $2.50 per share. I'm going to take out the regulatory credits because you can't give them credit for something that's going to disappear completely. Because what it is they're selling credits to other car manufacturers that are going to get penalized by the government. So they're giving them vouchers, coupons, not to pay a penalty. So that is going to disappear completely. Because Tesla is going to make roughly about $2.50 per share. Right? Roughly about $2.50 per share. It's me saying fair value. I'm going to give them 40x. So 40, 40. So I'll give it 40x. And if you give 40, 250, you're going to get roughly about $100 because that's what I was looking at earnings, about 250. So maybe you can go a little bit higher than 40x on Tesla, making 250, but not a lot more. So it doesn't mean that Tesla's going to fall to that. It means that that's what I'm going to look at. Now Tesla is growing, and I'm giving it 40x, which is 2 times the S&P, but The growth at Tesla is slowed. The delivery just came out and growth is at 36%. Mind you, in 2020, when the pandemic started, it stopped, but after it stopped and production started going again, Tesla was growing at 100%. Then it was growing at 80%. Then it was growing at 60%. Then it was growing at 50%. It's growing at 36% now. Guess what? It's going lower and lower, and that is not going to stop. It's not going to all of a sudden go from 36 to 100. It might go 36 to 40, may even do 50, but that's it. The growth of Tesla is slowed down. The law of sizes. As you grow bigger and bigger, it's tougher and tougher to grow higher and higher. So fair value. My fair value does not mean that a stock is going to hit a price. It doesn't mean the S&P 500 is going to go down to 3,400. But what the fair value means is that's what I place on it. I have a systematic system that's been working for me. I've been trading for like almost 30 years, and everything has to have a plan for me. Of course, tons of stocks don't have a plan. They don't follow the system. And when they don't follow, boom, I step back. No one is forcing me to trade. No one is forcing you to trade. If it doesn't follow my system, if we better be in a super bull market. If we're not in a super bull market, I will stay away. I will stay away. S&P 500 is close to 4,000 right now. I'm going to stay away. I'm going to wait till either the S&P 500 drops to 3,400 or earnings goes up again and sales goes up again. So video 1, fair value.